So our next panel is on digital assets and cryptocurrency. And every year it seems like it's like, oh, this is the perfect time to talk about that. And then once again, I think it's the perfect time to talk about this. So let me start by introducing Michael Dicke. He's a partner at Fenwick in San Francisco and chair of the firm's securities enforcement practice, also co-lead of the blockchain and cryptocurrency practice. Mike was previously the Associate Regional Director for Enforcement in the SEC San Francisco Regional Office. Welcome, Mike. Thank you. Also very pleased to introduce Robert Letson. He's a principal at Cornerstone Research. He has more than a decade of experience consulting on litigation and regulatory investigations and has appeared on behalf of clients for the DOJ, the SEC, the CFTC, OFAC, and many other agencies. Welcome, Robert. Our moderator is Littman. She's a partner at Willkie Farr, based in Washington, D.C., where she's co-head of the firm's Digital Works practice. And she previously, of course, served as the chief of the crypto assets and cyber unit in the SEC's Division of Enforcement, and also as a senior advisor to SEC Chairman Jay Clayton on enforcement matters. And she has promised me that she will explain the joke of the mugs on the table for anybody who doesn't get it.
I did promise him that.
Pleased to welcome Claudia
Quiroz.
Thank you. Director of the National Cryptocurrency Enforcement Team and Deputy Chief of the Computer Crime and Intellectual Property Section at the DOJ. She served there for over 9 years. Welcome, Claudia.
Thank you.
And finally, very pleased to introduce Erin Wilk, Assistant Regional Director in the SEC's San Francisco Regional Office, where she has served for over 4 years. Erin, thank you so much for joining us. And let me turn over to Kristina.
Thanks, Bruce. So we have not that much time and a lot that we have to explain. The last panel gave us an assignment. Bruce gave us a new assignment, so we'll get right into it. I think what people are probably most interested in hearing about is government priorities right now. So we'll start with Erin. Do you think you can talk through SEC priorities on the crypto front?
Yeah, so I'll try to do this relatively quick. And also just to begin, the views I expressed today are in my capacity as an assistant director in enforcement for the SEC and do not necessarily reflect the views of the commission, the commissioners, or other SEC staff. I think the priorities within the crypto asset space continue to be kind of fraud cases. I think 3 buckets: fraud cases, unregistered securities offerings, and third, intermediary cases. And I'll go into depth a little bit more about each of these. For fraud, we continue to see a lot of investment fraud concerning either the use of crypto assets, investing in crypto projects, or trading in crypto assets. And in that space, I think one thing that continues to be important is holding individuals accountable. A recent good example of a case is Crypto FX that we filed first in the fall of last year against an entity and the founders for operating a Ponzi scheme involving kind of high returns being promised to investors and the investment of their assets in crypto assets. That was followed in March by another complaint against 17 individuals who were involved with that fraud and involved like $300 million in investments that were raised from those individuals and 40,000 individuals, and it primarily targeted the Latino community. I think those types of cases continue to be really important to us. In terms of unregistered crypto asset offerings, we've continued to bring a number of cases in this space around different products such as lending and borrowing, staking, NFT offerings, and in the DeFi, which is decentralized finance space. So I think we'll continue to do so, and really the bedrock for those involves whether there's an offering of a crypto asset security being either an investment contract or a note. The investment contract analysis is under Howey, which continues to be kind of the focus of those cases. There's also an overlap between fraud cases and unregistered crypto asset offerings in a lot of the cases that we've brought. Finally, for market intermediaries, this one has gotten a lot of publicity recently. A lot of these are still being litigated, so I won't go into detail, but I think several members on the panel will talk about them more later. But generally, These kind of fall into the category of crypto asset trading platforms and other market intermediaries that are dealing in crypto asset securities and providing services akin to what you would see a national securities exchange, broker-dealers, clearing agencies, investment companies, and we view these as important. They're important intermediaries in the securities industry, and they provide benefits to investors such as, and I guess the regulations over them provide important benefits to investors such as platform oversight, avoidance of conflicts of interest, record keeping, kind of among other requirements. So those, I think, are the kind of three main things within the crypto asset space that we're continuing to work on and look at.
Thanks, Erin. Business is booming. Claudia, do you mind walking us through the inset priorities?
Sure. So just as a backdrop, the creation of the National Cryptocurrency Enforcement Team 2 years ago was one, it signaled the department's prioritization of, the response to illicit activity in the crypto space. And it's composed of attorneys from across the department as a center of expertise, not just investigate and prosecute cases, but to provide advice to the field, law enforcement, domestic and foreign law enforcement, and liaise with the private sector. And so just as the creation of the NSET 2 years ago, the department has been incredibly successful in pursuing criminal investigations and prosecutions around the globe involving the misuse of cryptocurrency. And this includes, crimes committed by exchanges and other infrastructure actors. And just in the last 6 or 7 months alone, I was, just looking at the list of actions, in less than a year, the department has been very, has made this a priority and has been very successful. I don't need to talk about the details of the FTX case, of Binance, the recent Mango Markets, Abby Eisenberg conviction. I'm going to talk about mixers a little bit later, but we've also had incredible success in not just holding operators of mixers accountable, but taking down mixers, which have operated as money laundering tools for illicit activity. Looking ahead, the department intends to focus on illicit finance. Its core focus in targeting the gatekeepers of illicit finance and those that operate money laundering, like money laundering facilitators in the ecosystem. DeFi is also an emerging field, a very growing field in the misuse, not just DeFi, but the misuse of decentralized finance. So our team is going to continue focusing on ensuring compliance and pursuing illicit activity in the space. We intend to continue focusing on investigating and bringing charges of, in terms of fraud, like scam projects, rug pulls, investors, theft of investor funds, and in terms of illicit actors, pig butchering. I hate the term, but it's we've tried to call it something else, but it's just embedded in common parlance. I think many of you know what it is. Cryptocurrency scams that have resulted in millions and millions of dollars in losses, on par with hacks in the past 2 years. And we're approaching this not as a macro strategy, leveraging our resources and partnerships across the department and in the private sector to try to help victims and hold perpetrators and scammers accountable. So going forward, in addition to cases and investigations, my team, we're going to continue our capacity building efforts domestically and around the globe. Also, with respect to engagement with the private sector, and this is a perfect crowd to make this pitch too. But that's a lot of the work that we do is engagement with companies in the space, and both mature companies that are operating in the space, and we and invite dialogue and conversation, and particularly companies that are just building. If companies that are building something should recognize that they need to know what they're building and the purpose of it, and to even if they have the best intentions, somebody's going to misuse their platform. There's bad actors out there that are going to exploit their platform, and so having the ability to provide screening tools, audit functions, respond to law enforcement process down the road is something that, in terms of ensuring compliance across the board in the ecosystem, it's something that is incredibly helpful. So that's just big picture, some of the things that we're thinking about and focusing on.
Thanks, Claudia. I want to turn next to some recent developments. There's a lot of litigation pending in crypto matters, particularly with the SEC. So Mike's going to talk us through some recent rulings. In my experience, every time a judicial opinion comes out, the industry kind of pours through it to parse it and see what it means for us. This is where I will talk about the Terra mugs, because Mike's going to cover the Terra ruling. These are, if you get Bruce's emails, you know that he sends these mugs for spectacular failed businesses if you make referrals. Terra is one of those. It was a case where they had the Luna token and the UST, which was an algorithmic stablecoin. It depegged, everything crashed, and now they're bankrupt, and Do Kwon, their founder, is in jail in Mongolia, I think, somewhere, for now. So, Mike, with that, will you walk through these kind of three rulings, Ripple, Terra, and Coinbase, that I think are, unrelated but have a significant impact on one another? So can you talk through those with us?
Yeah, I'll try to do it quickly because we have lots of other things to cover, and everybody has probably been following these already. The first two, Ripple and Terraform, really the unifying theme is where we are with those is remedy stage. And that's kind of, an important part of where a lot of we are with some of these litigation involving the SEC and also private litigation, which is kind of a natural outgrowth of the SEC's plan, I guess, or strategy, if you can call it that, of just serially suing ICOs and other offerings, most of which settled, but the better financed projects have litigated, and now at the stage where really novel and important issues involving what the proper remedy and what the scope and amount of the proper remedy is. So for Ripple, you all know that last year there was a kind of a split decision on cross motions for summary judgment. Ripple won 3 of the issues, and the SEC won the 4th, all involving different ways that Ripple offered and sold the XRP token. So focusing on the 4th, so the ones that Ripple won have been widely cited within in other parts of litigation. They're very helpful rulings for the crypto defense bar. The one that the SEC won was focused on Ripple's sales to institutional investors. Sales of XRP sold directly to institutional investors. The court ruled that those were unregistered securities offerings and sales. So that is what is being decided now, what the proper remedy for that violation is. The SEC is asking, not surprisingly, for a permanent injunction, as they always do, a permanent injunction as to not violating Section 5, and also disgorgement, $1.3 billion. I thought it was a mistake when I first saw it. I think people were kind of like, when they first came out, like, that can't be. But yes, they are asking for that much, as well as a $800,000 civil penalty. Ripple, in its brief, argued that because it's changed the way it sells to institutional investors, and because it won 3 out of the 4 issues, it shouldn't be enjoined. So that's, could be one of the, and I think that's an issue that's being hard fought. It could be an instance where, a fairly rare instance, where maybe the courts apply some really strict scrutiny to the SEC's request for a obey the law injunction, and we can get perhaps a ruling that limits the SEC's tendency to always want that, because if it's it's not, as Ripple argues, it's not needed, and it hurts them in innovating going forward as new technology comes along, and they have to worry about being subject to an injunction and potential having to come back to court and relitigate that issue again. And then their argument that disgorgement isn't warranted because, in fact, nobody lost any money on these particular purchases of XRP. Following, whenever that ruling happens, probably this summer, it's expected that both sides will cross-appeal for the items that they lost. And so everybody will once again still be talking about Ripple at our next conference because it will be at the Second Circuit. Maybe we'll have a decision by then, but we'll still be talking about it. And then people will be looking closely to see what the Second Circuit does. The next matter is Terraform. So I guess there's mug. I see the mug. So at the summary judgment stage, the SEC won on unregistered offerings. The court found that there was material issue of fact as to the fraud charges, so that went to a jury trial. In early April, the jury found Do Kwon and Terraform liable for fraud, mostly for misleading investors about the stability of the Terra USD stablecoin and use of Terraform to process payments on a particular payment application. So we're at the remedies phase. Kwon and Terraform and SEC filed their briefing a few weeks ago. One really interesting argument just to focus on is it's a Morrison argument. Kwon and Terraform have argued that the disgorgement has to be limited to securities transactions involving that took place entirely in the United States. That's one of the Morrison prongs. It covers, the Supreme Court said, SEC can only, claims can only be brought if they are listed on domestic exchange or entirely domestic transactions in other securities. And the courts have been grappling with this, with both of these prongs as it applies to digital assets, which are, as we know, creating these types of issues that you don't see with other securities. For instance, what does it mean to be on a domestic exchange? None of the exchanges are registered. That's usually think of a domestic exchange as a registered domestic exchange, but none of the exchanges are registered. And similarly, what does it mean for a transaction on a distributed ledger with nodes all over the world? What does it mean to be in a domestic transaction? And some courts have already ruled on these, but none has developed a test that I think anybody sees as one that's particularly attractive or really answers all the questions. So the court here, we think, will have to wrestle with that. The SEC argues for a more expansive view of the proper test here, arguing that the Dodd-Frank legislation abrogated the Morrison test as to SEC actions, and that the old substantial effects test is the proper test in this case. And that's a much easier test for the SEC to make. But again, there'll be proof issues about what is the substantial effect. What does that mean when you have transactions being validated all over the world? What does it mean to be, to have substantial effects on the U.S. or on U.S. purchasers of the crypto asset? So how the court addresses these competing views is going to be hugely important for other crypto cases that are in litigation or percolating or someday going to be in litigation, because the amount of disgorgement is can make or break a project of these projects of these sizes. Just of note, yesterday, Judge Rakoff put the remedies hearing on hold while the two sides talk about settlement. So we may not actually get any more guidance on these. We'll have to see. Lastly, of the three, SEC versus Coinbase. SEC charged Coinbase with operating an unregistered exchange. On summary judgment, the court, Coinbase made a number of arguments. The first one was on due process and major questions doctrine, and the court summarily rejected that. That hasn't gotten traction with any court, but expect crypto projects to still keep raising it because there hasn't been an appellate court decision. And I think everybody's hoping that appellate court will see the matter differently, and perhaps that will be a winning argument. But for now, no courts accepted it. They didn't accept it in Coinbase. The court held that the SEC plausibly alleged that there was, at least some securities transactions, some of the 12 tokens that the SEC charged Coinbase with trading were in fact securities and offered in unregistered transactions. The court also rejected the idea that Coinbase had put forward that secondary sales were categorically excluded from the Howey test. This was, in contrast to the court in Ripple, which seemed to embrace that argument, and it's one that's also hugely important to, obviously all the other exchanges that do business or want to do business in the United States. The court also found that staking as a service, we'll talk a little bit more staking later, but staking as a service was plausibly alleged to be a securities offering under Howey. Significantly, the court ruled in favor of Coinbase and rejected the SEC's claim that Coinbase's custodial wallet made Coinbase an unregistered broker-dealer. Hugely important for DeFi because and Coinbase's general counsel has pointed that out in several postings, because it requires more than making available a product that can effectuate or assist in making token transactions that the court would allege to be securities. That's not enough to trip broker-dealer liability, and that's something that in other DeFi cases is important. Coinbase has requested the permission to appeal the decision without waiting for the case to conclude. That hasn't been ruled on. They're going to focus, among other things, on this issue of secondary liability. If the Second Circuit grants their motion to file an immediate appeal, and so some of these issues could again be up at the Second Circuit in the not too distant future, and hugely important to the industry.
Thanks, Mike. I'll say on the Ripple appeal point, I'll be curious to see whether the parties appeal there. I think there's some speculation that because Judge Rakoff in the Terra opinion explicitly disagreed with Judge Torres's logic from the Ripple opinion, and then Coinbase doesn't really address the Ripple opinion as much, but almost pretty explicitly adopts the Terra logic. I think there's some speculation that the SEC might just let the Ripple opinion stay there as a district court opinion and not risk, elevating it to a circuit level where they could potentially elicit bad law when they have otherwise favorable rulings in the aftermath of the Ripple litigation. So it'll be interesting to watch after the remedies phase concludes whether either party opts to appeal that. But all of this litigation action has not gone unnoticed by the private litigation bar. So Robbie, can you talk through how some of the rulings that we've seen so far, and particularly the economic analysis around some of these transactions has impacted private litigation in the space?
Yeah, I think there's a clear theme of the last year, at least with regard to the economic issues that we've seen. And that has to be the marrying of blockchain analytics with what's happening on centralized exchange data. So we've seen that certainly in the SEC versus Terra case. But also in the staking as a service, the Second Circuit decision with respect to the Binance case, and a number of other actions. So regarding SEC versus Terra, I think most people are familiar with the famous May 2022 DPEG that occurred actually 2 years ago, I think the morning of this panel. It was pretty interesting. But what a lot of people might not realize is that there was a smaller DPEG in May 2021. And in that, UST spent a couple of days trading below $1 before regaining its peg and going on for the next year. And that May 2021 DPEG was actually at the heart of the SEC's litigation, and in particular, what caused the repegging of UST. So UST generally was, an algorithmic stablecoin that provided an opportunity for market participants to interact with a smart contract that existed on the blockchain. So when UST was below $1, traders had the ability to buy a UST, burn it for $1's worth of Luna, and sell that Luna. So unpacking the causes in the SEC's litigation, the allegations were specific to that May 2021 DPEG and what caused the repegging of it. SEC alleged that there were there was a third party that was undisclosed that actually caused the repeg of UST. So from economic standpoint, we can take a look at the blockchain data. We can pull apart the information and analyze the trading that existed on chain to assess who was trading in that decentralized contract in that mint and burn mechanism and what the associated impact was. And then we can marry that with information from centralized exchanges to see who's trading on centralized exchanges and link those two things together to create a complete picture of the trading and assess those types of claims.
Thanks, Robbie. I want to turn to mixers now. I think I'm going to mix the order. I'm going to mix the order up on you a little bit and start with Claudia here, just to make sure that we get through what we want to get through. You mentioned in your remarks that it's a clear priority for your team, and I think that's clear from the many, many cases you've brought in this space. I do a lot with clients, layer one protocols, who are trying to build blockchains that embed a lot of privacy and data protection. It's kind of the ethos behind crypto. That seems in direct conflict with your goal of kind of avoiding obfuscation around the origin of funds. And so it's something that a lot of my clients struggle with. You know, if we build this protocol, are we going to be perceived as a mixer? I know you've brought Harmon, Hydra, Sinbad, Helix, Samurai. There's a long list, Tornado Cash, of mixer actions out there. Can you talk about kind of what are some of the central themes of these cases, and particularly, you know, what should developers be cognizant of when they're creating a product so as not to be on the receiving end of a grand jury subpoena from you?
Sure, and I'm cognizant of the time, so I'll be brief. So, you know, criminal actors use cryptocurrencies. We've discussed, you know, and other digital assets for money laundering, and that's the core of it, right? Like the money laundering aspect and crux of like using mixers. And so there's different techniques that bad actors can use. You know, sophisticated obfuscation techniques like complex and rapid transactions, chain hopping, you know, from one chain to another by converting funds from one cryptocurrency to another, use of anonymity enhanced coins or privacy coins, other measures, etc. And as you noted, mixers are a primary one that we have focused on as one of NSET's mandates to go after, you know, infrastructure actors. And so, you know, you have mixers operate in different ways. Like you mentioned, Hydra. Hydra was actually a case that we investigated out of the Northern District. That was my investigation. And we took down the marketplace, and it had an embedded mixer in it. Hydra was a darknet market, and it had the Bitcoin Bank mixer embedded in it. So, and you have other darknet marketplaces that have their mixers. So that's a common trend, right? You have a platform that is clearly an illicit, it's used for illicit activity, darknet markets, sale of illicit goods with the embedded mixer in it. And what we've seen a lot in the past few years are the increase of hacks, rat hacks and theft of crypto, a large percentage of those perpetrated by North Korean actors. And so where you've seen a lot of the funds being laundered through mixers like Tornado Cash, like Sinbad, which Sinbad is another mixer that my team took down in collaboration with the Dutch and Finnish law enforcement and FBI in November of last year. It took down the site, it seized the servers. It was used by bad actors, including North Korea, to launder funds. You know, you have, for instance, Sterling Up, Bitcoin Fog, and this was a trial. Two attorneys of my team tried this case this spring, and this case was charged in April 2021. Sterling Up was a Swedish-Russian, dual Russian-Swedish national, and he was indicted for operating and Bitcoin Fog since 2011. And Bitcoin Fog was the longest running cryptocurrency mixer. And it moved over 1.2 billion Bitcoin over the course of its operation. And the bulk of the cryptocurrency that had moved through its platform came from darknet markets that was tied to illegal narcotics, computer fraud, abuse activities, identity theft, etc. So, I'm not going to go through all the different examples, but if you ask about what's the common theme, you have, like I said, infrastructure actors that are clearly illicit, that have these mixers embedded in them, or then you have these mixers that launder millions and millions of dollars of illicit funds through their platforms.
To be clear, my clients are not illicit platforms. They are noble and good innovators just trying to protect privacy.
Yes, I'm sure they are.
You mentioned Bitcoin Fog a couple times. Robbie, this is one where there was a challenge to the reliability and validity of the blockchain analysis that was submitted through expert witnesses in that case, and there were some Daubert rulings on that. Can you talk a little bit about those rulings and the impact that, I imagine this is going to continue to come up in these cases, and the impact it might have on other matters?
Yeah, I think Bitcoin Fog is another really interesting case, in part because of the reliance on those blockchain analytics. So here the government relied on analysis that used the Chainalysis reactor software, which is obviously proprietary. And the defense argued that the analyses based on that software were inadmissible because they were not the product of reliable principles and methods, and because the reactor has not been peer-reviewed. The court's opinion in that Daubert ruling, I think, was really interesting. I'm just going to touch on two pieces of the Daubert factors. So the first, with respect to testability, the court found that the reactor's clustering, which was the type of analysis that was done to group these wallets together, or the entities associated with certain wallets together, can and has been tested. And they cited examples of both manual tracing, so the ability to go on and view the blockchain individually and assess whether the attributions were correct, as well as competitor software. So Chainalysis isn't the only provider of this type of software. TRM has one, and they largely produce similar results. So the testability, I think, really speaks to having the capabilities of doing blockchain analytics and not necessarily needing the specific software that might have been used by one side.
Thanks, Robbie. Mike, the Tornado Cash matter is set for trial, I think, later this year in the Southern District of New York. The founder there was recently convicted in the Netherlands of money laundering. Can you talk a little bit about how that conviction might impact the U.S. litigation?
Yeah, let me start with it. What's happening with the mixers and what's happening with DeFi, they're closely related. I think, Kristy, you kind of touched on it, right? Is that there's a lot of projects, a lot of people working on projects, working on DAOs with decentralized governance, and DeFi projects where they're participating and they're worried about getting sucked in to any sort of these cases. In the Tornado Cash ruling, in the Dutch court basically said, this, you've launched this into the world. It's not a benign tool. It's a tool that's kind of essentially made to be misused. And I think that argument is awfully surface, and that it broadly speaking, it could pull in other legitimate projects under that reasoning. And that's and this is the same issue that's live in other DeFi cases. And so I think the same arguments are going to be made in the criminal prosecution here in the United States. And it's different defendants. They're all co-founders of Tornado Cash, but they're the person who was found liable in the Netherlands was sentenced to about 5 years in jail there. But it's different co-founders here. One of them who's still not been arraigned is not here. And the other person who is here and is going to be tried. But I think the focus, again, is on where's the line between software that's not controlled by anybody, that's created and launched into the world but can be misused. When does the line for criminal liability versus a legitimate decentralized protocol that can, like many other products that we all use can be misused. And where's the line for that liability? One other side note on this, because it's such an important issue, when people are developing these projects worried about personal liability, there's a new insurance product that we've been advising on that's just launched that essentially provides D&O insurance for DAO members and for people working on DeFi projects, so that should they get an SEC subpoena or be sucked into private litigation, they actually can mount a defense, and they can hire some of you all to defend them. And I think that's kind of one of the next evolutions that's going to be important for this space.
Thanks, Mike. DeFi is certainly an emerging focus for the SEC. I want to turn next to kind of emerging areas of focus for the SEC. We'll get to DeFi, but let's start with NFTs. Erin, the prior panel talked about the Chastain case. That's one where the criminal authorities charged insider trading around trading in NFTs. No companion case from the SEC on that one. There was the Wahi case, which is the former Coinbase employees who were charged by the criminal authorities under a wire fraud statute and by the SEC under securities fraud statute. SEC's case settled after they were convicted on the wire fraud charge. We never really had to reach the issue of whether those assets were securities because it's settled. But there are two other settled NFT actions that the SEC has brought. That's Impact Theory and Stoner Cats. Can you talk us through kind of what the common themes are? There's a lot of uncharged NFT projects out there, and I think people are kind of clamoring to understand what was it about these two that earned them an SEC investigation?
So I think in general, the SEC, in looking at these offerings, is going to look at substance over form and what is the economic reality here. So it's looking closely at how investors are investing in the project, what they think they're investing in, how the project is being marketed to them, what the issuers are telling them they're going to be doing to develop the project, and their expectation kind of profits from those efforts of others. So I think in Impact Theory and Stoner Cats, you have those fact patterns coming out, which is in line with kind of the Howey analysis sort of just outlined, where in Stoner Cats, although they were purchasing an NFT image of like a stoned cat, you were seeing that investors understood they were investing in a web series, that the Stoner Cats entity was going to be developing that web series, promoting it, and the value of that NFT was going to be dependent on that work by the issuers. Similarly, for Impact Theory, it was a media entertainment company. Investors were buying kind of a founder's token digital image, but they understood that the value of that would also increase as demand for the platform increased and development of the offering, the business that they were offering, which was at one point, I think, compared to we're building the next Disney, for example. So I think you just see those common elements of Howey, that investors understood they were investing in something with an expectation of profit based on the efforts of others.
Thank you. So I want to turn to DeFi with our last few minutes. This is a space where I think, in my view, the SEC hasn't brought a truly DeFi case yet. There are a couple that I think of as DeFi in name only. I don't even think the founders in those cases really think that their project was decentralized. Of course, I think the SEC's view, certainly from statements that Chair Gensler has made and statements in other litigation, is that everything is decentralized in name only. The Mango Markets complaint, that it's parallel to the Avi Abramson case that Claudia mentioned. There's some references to governance voting rights on that protocol being illusory, and an implication that while they claim that the protocol is decentralized and governed by voters on the protocol, in reality, there is a core group of founders who are controlling everything about the protocol. So I say that while it's not a DeFi case, I think it sort of is one of the only public allegations we see about how the SEC thinks about DeFi and the level of skepticism inside the building about whether there is any true decentralization out there. The Barnbridge DAO case is an example of a case that, in my view, is decentralized in name only. But can you talk a little bit about that case and how the SEC is thinking about these?
I think I agree with you that there are a lot of projects that are DeFi in name where you see the founders completely controlling everything, developing everything. Everything's sort of dependent on them being there for the project. I think also with the DAO structure, even if you have created a DAO, like that could be an association of people that is still moving the project forward. And if investors are putting their money in, expecting the DAO to be developing an investment product for returns, then you very well could have something that falls within the SEC jurisdiction. I think Barnbridge was interesting in that it both had kind of a DAO feature, but it also had technology based on the blockchain and smart contracts. And I think there the SEC's view is you're not going to get out of the securities regulations just because you're putting something into an automatic system of code. And in the settled action, we determined that they were offering kind of unregistered investment products around these smart yield bonds that were compared to notes where investors are expecting to get a return through this kind of structured finance product that had different tiers of risk that they could take on and different variable interest rates, and that they were also operating as an unregistered investment company. So I think, there we do have the DAO and the crypto technology and a finding, at least in terms of settlement, that the SEC regulations still apply here.
One matter that has gotten public attention because the project itself has publicly talked about a Wells notice it received and recently published their response to the Wells notice is the Uniswap, which has also been the target of private litigation in front of Judge Fela, same judge overseeing the Coinbase litigation in the Southern District of New York. Mike, can you talk about the recent ruling where she throws out the case against the private case against Uniswap and how that might impact future cases?
Yeah, I'm still just pausing on the fact I can't go out and buy a JPEG picture of a stone cat anymore. Thank you, Erin. We're all deprived. So Uniswap class action, the judge very forcefully rejected the arguments that Uniswap was a centralized offering and accepted the notion that it's a decentralized software protocol that is not a securities offering, and had a lot of great quotes that are very helpful to a lot of different areas in crypto, talking about the gray area involving DeFi projects and the need for greater regulatory rulemaking and potential legislation. Without that, she said that I'm not going to hold liable the developers of a software protocol that's been launched into the world and has been misused. In this case, it was misused by scammers who listed tokens that were worthless on the platform, and the plaintiffs in the case had bought those, and they were trying to hold. They couldn't find the anonymous offers on the platform, so they were going after the platform, Uniswap, and the court said, not going to do that. Contrast that with the Dutch ruling we were just talking about, where for a mixer, that's exactly the argument that was made. You can't hold me liable. It's not centralized. It's not. It's not. It could be used for good or for ill. You can't hold me responsible. In that case, somebody's going to jail over that argument. Here, the court, dismissed it, and I think it's going to obviously play. Those arguments are going to be at play in the SEC case if they bring one, following the Wells received by Uniswap. And Uniswap will make a lot of the same arguments.
Thanks, Mike. So we're out of time and we're standing between you and lunch. I will say staking was also on the list to cover. So I think it's probably another next frontier. There are a couple cases pending against Kraken and Coinbase for staking as a service. So if anyone wants to talk about staking on a break, find us. Otherwise, have lunch.